Pashupati Advani also joins us on the show right now. Pashupati, what you're doing? Are you looking at buying into these dips, at least in certain stocks and certain pockets, or just sitting on the sidelines for now?
I'm actually still a little nervous because I think that there are some things that are going to affect India going forward, and the thing is the FII selling is still not stopped. So we are seeing good names come cheaper. So as long as it's continuing to go, when you have large caps falling by 1.5–2%, that means that the blood is still out there. So still a little cautious. I think once it settles down and then turns, then one can take a look at maybe buying again if it's up, maybe 3–4% off the lows. But still, it seems to be going down.
And just wondering, Pashupati, what is it that you've got your eyes on? What is it that you would be buying or at least have on your radar? Should it fall further, you'd buy?
No, I think you're getting the opportunity to buy big stocks. So, one can look at things like Reliance. HDFC Bank has jumped up a little bit, but it probably is attractive when it comes back into the 1600s. Some pharma stocks that I like, they will also do well. Maybe things like Asian Paints, some of the Tata companies, the big blue chips, because they're the ones that seem to have fallen off. And that's what's actually pulling the Nifty and the Sensex down. So I think you're going to have an opportunity to get in. I still think there's a bit of time for this because it's still not settled, because every day we're still seeing negative figures from the foreign investors. And until that stops for 2–3 days, I would not jump into the water with my head first, if you know what I mean.
Yes, we do, absolutely. But the FII selling hasn't really turned as of now. So yes, it's better perhaps to sit on the sidelines. But Pashupati, will you be sitting on the sidelines come tomorrow when Swiggy lists on the bosses? For now, the expectation is it's going to be a muted one. But if you're a long-term investor, would you just dive into that one or again staying away?
So what's happened is we've had 3 or 4 large IPOs. Apart from Swiggy, we've had Hyundai last week. And that also takes money out of the market. And at the end of it all, we're a market that runs on supply and demand. So I think that what's happening is that because you've had these large IPOs suck money out of retail as well as wholesale money, it is causing a bit of a damper. And normally when you look at new issues and you look at them a year later, hardly 3–4 of maybe 15% are up and 85% are down. So let's hope that Swiggy is one of the ones that is going to be down, because long term, I think Swiggy is great.
Okay, so long-term Swiggy is still better. We'll try and get those graphics up for you on the screen with respect to the overall allocation that we had seen. It was a good subscription when it comes to the institution part. But if you look at the retail participation, it was just around 2 times in terms of the subscription that had come through. But just taking stock of some of the other buzzers, and from the pharma space, there are names which are actually holding out. A couple of names which will, like Eris Life Sciences, Fortis Healthcare, etc. Rainbow Children's is up and about. Rudramurthy, any names within pharma that you're looking at buying as yet, or again staying away from that space as well?
See, Aisha, for me, yes, 2 sectors where you can hide in this fall will be 1 IT and 2 it will be select pharma. But still for me, this market has still not bottomed, and I fully agree with Pashupati. The only number 1 factor you can make it easy to call this market bottom is to see the FII selling. If I'm not wrong, even yesterday 2,300 crore of FII net selling was seen in cash market. And overall, for just a month's time, they have sold over 1,30,000 crore. So for me, this FII selling has to stop. We have to see at least some amount of buying from FIIs, at least for 2 consecutive days. And then one can conclude that yes, the bottom has got formed, or one can look at cherry picking. Or else in general, this market is definitely a sell on rise for very short term. Wait at least for some amount of FII buying to emerge in this market. And if you are still a very prima bull and you want to buy this market, then look at sectors like IT, where stocks like Wipro, or even for that matter TCS, Infosys, any of these stocks look good for me. As a sector, IT can be that hiding place. And you can also look at pharma. Yes, stocks for me like mid-cap pharma, and especially stocks like Laurus Lab, or something to do with stocks like Granules, Fortis Healthcare. So these are some of the stocks where you can definitely be very selective in pharma and hide in this fall. So IT and pharma will be the 2 sector in general one can definitely buy if you are a bull, and wait out for FIIs to turn out bullish. and let them turn out net buyers, till then I will definitely avoid buying in any other sector in general.
Right, okay, avoiding right now buying anything in individual sectors for the slightly medium term. Still in the red, it's resurrected a little bit. 260 points lower is where we're currently at. Not resurrected, I stand corrected. We're still down a good 1.5% from the top of the day. Britannia, that's the one which is really bleeding. It's down about almost 8%. It's almost looking like the Asian Paints move from yesterday. The management has said that there are going to be another 4 to 5% kind of price hikes in the next 2 quarters. They're saying that they will be executing the price hikes by December, Jan. They do expect some short-term volatility or impact on volumes as well. And they are gaining market share, however, in the QCOM as well as the e-commerce as well as modern trade instruments. They're saying rural is now inching towards a double-digit growth, starting to look better, hoping for the recovery to continue. And they do expect to maintain margins going forward as well. But still, it's quite a bit of bloodbath on Britannia. And mind you, this stock also went in weak into its numbers. Yesterday too, it took a knock of about, I think, 4 to 5 odd percent, if I'm not mistaken. In fact, let's hear out what the management had to say on their conference call.
There will be about 4 to 5% price increase in the next 2 quarters. So that we'll have to take. And we will do it strategically in SKUs where we haven't taken a price for some time. But if you have to take 4 to 5% on our entire portfolio, it tends to hit the large SKUs and large brands. So we are in the process of doing that. It will be gradual, but yes, wherever we can, the price increases are. If it's a direct price increase, it'll be taken right away. But I would say December, Jan, we'll be done. We've been seeing very good growth as far as quick commerce and e-commerce is concerned. Even modern trade has been doing reasonably well, although the competitive scenario there is pretty tough. But we've been doing well, and we've been gaining share in both quick commerce, e-commerce, as well as modern trade. Rural's coming back slowly. So as rural, starts to come back to the kind of double-digit growth that we were seeing in the past, I think we should be in a good place. See, rural is doing better. Rural was doing worse than urban till about 2 quarters ago. So it's doing better, but still it's in mid-single-digit kind of growth for FMCG. So that's not what it used to be, let's say, 4 quarters or 8 quarters ago. For us, we were growing high double digits as far as rural was concerned. So it will come back. I think it's starting to look much better, and we are hoping that things will get better with, the rural economy continuing to do better than expected. So we expect to maintain margins rather than increase margins, balance inflation, and make sure that we are able to keep a stable margin profile. The rural growths are reasonable. I would say slightly high single-digit kind of growth.
If you look at H1, we've ended up at about 18.5. So we are still within the overall guidance which is there. The attempt is that in the coming quarter, definitely the full impact of the price increase we have taken will come in. And we are hoping that if there is definitely some stability in the crude prices and we see some amount of deflation, I think we would definitely aim that we are in that band for H2 as well as we kind of go forward. When we look at H2, quarter 3 is, as I said earlier, looking a little bit challenging in terms of the overall numbers. We'll have to see how it pans out. But I think overall, as we go into quarter 4, we should see definitely some improvement happening. Based on that, I think we should kind of really maintain, single-digit volume growth numbers for the year.
Still confident about growth going forward, though they're talking about single-digit growth when it comes to volumes instead of double-digit that they had pointed out earlier, and clearly competition heating up in the space. Pashupati, what's the take on urban consumption? Paints, for instance, despite those pre-sales numbers and the real estate numbers picking up, clearly the competition is something which is impacting companies like Asian Paints.
Well, Asian Paints has been the market leader, and there are now 4 or 5 strong players who've come into the space. So obviously, it's going to create some. You can always only go down, and we've got real deep-pocketed players that have decided to come in, like Mahindra's, like Jindal's. They've all decided to come into the space. So it's going to be interesting times. All I can tell you is that I'm looking forward to getting better quality paints to be able to paint my house. So I think it's better for the customer, and it's great for all of us.
And clearly, are you looking at ordering some better food from Jubilant as well? Because the Domino's business has managed to bounce back. Is it you who's been ordering more pizzas?
It's not that. I believe I read somewhere that Domino's delivers pizza in 9 minutes or 10 minutes. I don't know how, but they do. But I don't know.
Could be, but from what I recall, when we last used to have Domino's, and that was one of those first people who would deliver 30-minute delivery, right? And they would give you the pizza free otherwise. Yeah.
9 to 10 minutes is something of a revolution, if I can say, in the industry. A quick commerce kind of feeling. But please go on, Pashupati. You were making that point regarding urban consumption.
I was also making the point that what is going to happen with the advent of, people like Swiggy and Zomato also going in for the delivery business. It's becoming cutthroat. The QSR business, which is the organized food delivery business, seems to be growing. There seems to be interest in investing in those kinds of companies with new brands, with existing investment to these brands. So I think that, that's the next phase, because it's becoming an official market from the unofficial market. And you're getting cloud kitchens and food versus the old days where people would just make food and send it to you. So that is a subtle transformation that's happening, and it comes with people earning more in their pockets. So I think that's definitely, we are following the rest of the world in that.
That's that coming in on Jubilant FoodWorks. In the meantime, just taking stock of some of the other names, we're down a good 350 odd points from the day's highs, by the way. Not to say that the day's highs were anything fantastical. We started off very muted and marginally higher. From there, of course, we've slid quite a fair bit, even breached the crucial 23,900 mark as well. But Naresh, what kind of downside does it now open for the index? And do you see a further continuation of selling now that we've breached 23,900 once again?
So the recent low, we are almost there in terms of breaking. The next major price point for the Nifty is closer to the 23,400, 500 mark. Now, that is why is that important? That is the price point we roughly saw on the day of opinion polls. That's the high we saw. And post that, that was also a point of time where we roughly used to get some resistance and saw a little bit of a consolidation. So 23,250, 23,400, 23,500 is the next price point. Also at that point of time, we get a good correction also done from 26,200. So we'll be watching out for that price point going forward. And on the upside, once we start crossing 24,300 to 500, then it becomes a trend change. So for now, this becomes a 1,000-pointer range, which is a little large for the near term.
Yes, the selling is clearly intensifying when it comes to the market. Sensex almost a 1,000-point cut at the moment. The frontline index seeing quite a bit of dropping, almost a 300-point slide coming in. Not sure if you're missing any news flow as such, because there hasn't been anything incremental during the trading session which would sour the sentiment per se. Yes, the global markets could be attributed regarding one of the reasons of the same, but the Bank Nifty is down 700 points. HDFC Bank is seeing quite a bit of selling pressure. SBI is down, PNB is down. So clearly, the market not willing to give a benefit of doubt at the moment, at least with respect to how earnings have panned out and how valuations are stacking up. In fact, on the losing side, apart from Britannia and Whirlpool, there's also Pharma, Bosch, GE Shipping. All of these stocks are coming under quite a bit of pressure at this point of time. What do you mind, Pashupati, will turn the tide for the Indian markets? Because as we usually say, it's, towards the year end, FII flow and FII activity already ebbs because of the holidays, etc. Earnings we have seen, they've come and gone, election has come and gone, Fed decision has been done with, RBI largely we know the way forward. What then will turn the tide perhaps?
I think markets globally are going to settle at a slightly lower level. One of the things is that I know the Fed cut rates by a quarter, but I actually see it very difficult for them to cut rates further, at least for the next 3 to 4 months. And I know because in any case, Donald Trump doesn't come into the White House until January. So I think for the next 3 to 4 months, there's going to be no cuts. Even when he gets into the White House, it's going to be tough for him to cut rates. And as long as rates are where they are, plus the Japan carry trade has gone, all of a sudden it's, there's no real reason, to stimulate the markets. And of course, we're seeing selling from FIIs because the Japan carry trade is also vanishing. And I think that's also, people are having to unwind, get less leverage. And I think all these things are factors that are going to push nominal asset values down. And I think that that's what we're watching. And it's happening slowly and it's happening painfully. But, you say, okay, what should I sell? But everything is down 1%, 2%, maybe 3%. No, it'll come back. So you hold on. But basically, it is a time to generally lighten up. And I think that, because I think we're still headed downwards. That's my personal thought.
Interesting. Okay, let's get in some BTST trades as well before we wind up for the day. Naresh, what's on your list?
So taking a long and a short. So first is a buy on Reliance Industries. Stock is showing some bounce back today. Stop loss at 1260, target price of 1310. Sell on MCX, would revise the stop loss at 60 and 40, target price of 6050.
Right. Rudra, what about your BTST ideas?
I'm taking both sell calls. One is a sell on RBL Bank. This has been a weak counter. Even in markets which were doing good, there was no respite or any bounce in RBL Bank. So I will be a seller in RBL Bank. Available in futures, looking at target of 150 with a stop loss of 165, and also a sell on M&M Finance. Again, this stock has been a sell on rise kind of a stock, very weak counter. One can look at shorting M&M Finance for a target of 250 with a stop loss of 272. So a sell on RBL and M&M Finance.
Okay, so those are the recommendations coming in. We're just putting the spotlight on the auto sector, and first talk about Hyundai because the numbers came out today and they were weaker than expected. The con call is underway and there's just incremental commentary coming in from the management. They are saying the trend of low single-digit growth is expected to continue. So not high single-digit, but low single-digit is what Hyundai is kind of targeting at this point of time. Current demand moderation is natural, confident of demand recovery in the next few quarters. Macro environment remains challenging but will focus on strengths and double-digit growth in inquiries and retail in the festival season so far. But going forward for the year, they're expecting a single-digit growth. Red Sea issue is impacting some of the exports, and they did talk about how a couple of launches are lined up in the coming quarters. So just watching out for all of that, but the stock continues to be in the red right now. The other one that we're watching out from the auto space, especially the two-wheelers, of course, Eicher Motor. The numbers are expected tomorrow. It's expected to be a decent set given the kind of numbers we have seen from Bajaj, TVS, etc. We already know the volume figure. The overall Royal Enfield volumes declined by 1% year on year this quarter. Domestic volumes declined 2%, but it was the export volumes that managed to hold one end. Overall, with respect to that, we are expecting a revenue growth of mid-single digits, 7% thereabouts. It's going to be led by increase in realizations and not clearly the volumes, because I talked about how the overall volumes were subdued. Margins are expected to stay steady, maybe 26% thereabouts is what we are expecting. That average selling price or improvement in realization will support the margin at one end. The product mix has also turned better because of more exports and higher value products being sold. But on the other hand, because there were a fresh couple of launches lined up this quarter, the advertisement and promotion spends have gone up. So that's the reason the margins might be a bit limited around 26%. And then overall, we are expecting that for the Royal Enfield business, margin is expected to be stable at 28%. While if you look at the commercial vehicle part of the business, the margins are expected to remain flat quarter on quarter. So that's the picture that we have for Eicher Motors at this point of time. Let's see what they deliver come tomorrow.
If you like this video, then like, share and subscribe to ET Now.